Hey guys, so today I'm going to be talking about DraftKings stock, and I want to show you guys a few reasons why I think this company is going to reverse very, very strongly over the next few days and even weeks, and why I think that if you buy into this company right now, you could potentially see a return of 10 to 30% over the next month and not really a very long time period. We're talking about short-term time periods here, and I think the company is going to see a very, very strong reversal over the next few days and especially weeks. So let me show you a couple reasons why, and especially I want to ask a few questions before we start. Has the sound problem been fixed on my videos? I think I finally corrected the issue where the videos were a little too quiet. Also, let me know whether you like this format where I go straight to the technical analysis, or if you prefer to see me talk on the Robinhood screen for a little bit about some of the company's financials before I really get into why I'm watching the stock at these technical analysis levels. So let's get straight into it here, guys. Now, DraftKings is a stock that I am very, very long-term bullish on. I love betting myself. Obviously I'm not going to bet away my house, but I still like to bet a lot on a regular basis. And as such, DraftKings is my favorite place to put in those bets, especially on sports related things. And with sports actually starting to open back up, a lot of these sports are starting to become more regular with some fans in the stands, etc. And with that, we've seen a lot of people pour into these gambling sites and start to really revamp their love for gambling. And that's always going to be a positive for stocks like Penn Gaming and DraftKings, and especially in the long run. Now, we saw DraftKings hit a high of around $65 over the last few weeks, and basically they were really sitting at a good position to continue breaking out. You can see that if we draw a line between the last all-time high and this one, they were obviously very clearly looking like they were going to continue to the upside and see some more gains. But unfortunately, the company actually announced that they were having a share offering, raising about $1.6 million, and they were going to be selling a lot of shares around the $52 price range. And what that means is that a lot of investors around this $64 range felt like they were just getting cheated. Now, if your shares are worth $65 and there's 100 shares on the market, and then all of a sudden there's 200 shares on the market, well, it just makes sense that your shares are now worth half. So a lot of people really saw this as a bad moment for DraftKings stock, a bad decision. And even though this frees up a lot of cash for them to do things in the future with their company and grow their ever expanding business, it's just unfortunate that they did it at a time when the company was still growing, because it's going to put a lot of pressure on the downside on their stock here, and especially in the short term. Now, over the last few days, we've seen a crazy sell-off all the way to around $51 today. And one of the key things to see here is actually how they bounced yesterday around this 51.80 level, or $52, which is actually where those last shares were sold on the offering. So you can see that a lot of people are bearish right now, but they are keeping this $52 price range in mind as a good point to kind of see a bounce on the stock, because this is where the other shares are worth, and how much they're worth is going to be a good indication of where a lot of people are holding a long-term position, and potentially a place where the stock can't sell off below a resistance point. So that's why a lot of people were seeing some resistance around the $52 range. However, we continued breaking down after that, and you can see that the stock is now sitting around $51 and looking to test these recent lows that they actually bounced off from around 50.22. Now, the key thing for me is that these lows are very obvious that they are a bullish region. And why do I say that? You can see that the candles here, whenever they break down below this price, are very melted. And what that means is that right now I'm on the hourly chart, and you can see that even though sometime in this hour, DraftKings did break below this 50.80, this 50.22, sorry, they immediately bought back up, and the candle did not hold below this range. And especially here, it happened as well twice in the same hour, or in the next 2 hours. And then it happened again here, where they broke the lowest they've ever been over the last few weeks, $47. And just in the matter of 2 hours, we're already back above 50.22. So that's why I'm really watching this price. And I think that a lot of people know that this is a very, very cheap price to get DraftKings, especially long-term investors and a lot of these people who watch this stock on a daily basis and follow the financials of the company. Now, like I said, they are a growing company, and as such, they have a lot of potential to the upside. Now, we've already tested these $65 levels, and we know that DraftKings can get back there. But in the short run, what levels am I looking at to potentially hold them to? So like I said, I'm going all in on DraftKings. I'm looking to buy around 100 to 150 shares and sell puts on this company for the basically October 16th expiration date. So by next week, I think they will already be out of this $50 range and all the way back to around $54. And that's going to be pretty important that they do this in order to see whether or not they are going to be bullish in the short run or if we're going to see a much slower recovery. Now, one of the key things that I do want to say and be careful about is that although we haven't broken down below this $47 in the past, it's very possible that we could break down all the way to around 43 or 44 and potentially retest the old all-time highs. Now, if we do this, I think it will be an extremely good price to buy DraftKings. And that's why I say 100 to 150 shares. Now, I'm going to buy the bulk of my position around the $50 range because I really think that's when they're going to see a bounce. And I'm going to share a few more reasons in a few seconds why I think they're going to see a bounce at this price. But like I said, guys, they might break down to this 43. And although it's very unlikely, it could happen. And if I am able to buy 50 shares, half of basically my whole position at the 43 is going to give me a very easy time to recover when we head back up to 65 or even above. So like I said, guys, it's going to be a great opportunity to buy into this stock, especially for the long term, especially for a swing trade. And if you are looking at this stock over the last few days, you'll see how bearish they are. But actually, one of the main reasons why I think we're going to find a support around the $50 range is because you can see how much crazy buying happened when we did find this support around 51.80. So what that shows you is that there are tons of investors waiting to bounce in any second and waiting to buy up this stock whenever it does reach into this into this rectangle. Now, if we do test the bottom side or the top side of this rectangle tomorrow, then I think I'm going to start buying into the position, 20 shares at a time, until I see some real correction and until I see a real trade to the upside available on DraftKings. So like I said, what am I looking for here on the short run is going to be whether or not they can break above the 50 EMA. And you can see that they were actually testing it very closely on the 3-minute chart here, and we're basically breaking down below it. But now you can see that we're really testing it strongly, and the last few candles look like they actually might be able to break above. So that's why I'm really careful. We're super close to the price, and even though we aren't at the exact price, it doesn't mean that the company has to hit this level in order for us to buy in. If we have other signs from other technical indicators showing us that this is a good time to buy, then potentially we should buy. So like I said, that's one main reason, the volume on the stock, the fact that they might break the 50 EMA, which is a key indication that the stock is in an upwards trend. And the third thing is going to be the RSI here. So the RSI is a relative strength indicator. And what this means is whether or not the stock is oversold or overbought in that same time period. And right now we're looking at the 1-hour chart, and you can see that DraftKings is extremely oversold. Now, the last time they were this oversold was the last time we were breaking into the rectangle around $47. And you can see what happened after that time. They immediately broke up to the highs, and they broke up all the way to around this $60 range. And that's why I'm really watching them to see what they will do tomorrow, because they had so much momentum the last time they were around this price, and the last time the RSI was reading this strongly to the downside. And that's why I think that they are going to see a large bounce tomorrow, and especially into the coming weeks, as traders really take advantage of this position and come in at a cheaper price than even the offering was at. That's going to allow people to be very confident in a long-term position. So in conclusion, I'm watching this rectangle, seeing if they break below, break out, break into the rectangle, etc. But I'm going to be especially watching whether or not they break above the 50 EMA as kind of an indication of whether or not they're seeing upwards or downwards momentum in the short term. And then I'm going to be watching whether or not they reach the bottom side of this channel, which if they trade sideways, could be around the $50 range in maybe a few weeks, unless they have a large bounce and really show me that this RSI is a good indicator for the stock, which has previously been a very strong indicator. As you can see, every time that they're sitting at the bottom of the RSI, it's followed by a huge period of buying here. So that's why I really trust the RSI for this stock. I think it's going to be a great indication that we might see a huge move to the upside tomorrow. And like I said, I'm going to start scaling into a position as soon as the stock opens. If this stock runs in after hours, well, that will be extremely unfortunate because I wish I would have scaled in a little bit today. But being greedy and looking for that bottom price, I'm waiting a little bit more. So yeah, guys, I'm really bullish on the stock. I think it's going to be one of the biggest bounces, V-shaped recoveries that we've seen over the last few weeks. And especially with the stock market breaking to all-time highs and back to these high levels that we haven't seen over the last few months, I think it's going to be really obvious as a trade that DraftKings should also be breaking back to highs, as this is a company that just continues growing where they can do their operation, growing who allows the online gambling service, and that's going to be really key in them spreading their arms all over the US and essentially internationally as well. So just keep a close eye out on this stock, guys. Extremely bullish around the 50.22. I'm going to be watching what they do once they're in this rectangle, as it's going to be extremely key to show us what the long term is going to be on the stock. Like I said, if you get the shares around 43, I don't think they will break down to there, but it would be an extremely good position for you. And I'm looking for around 10% return in the short term. As they go from around 50 to 59, that would be 15%, but they do have this short-term resistance around the 54.80, and that's going to be my first level to watch. My second level to watch is going to be around the 59, and then if they are able to clear this bar, then I'm looking for around the 64, 65, near all-time highs, where the position will be eventually up around 30%. So like I said, the smartest thing to do here, guys, buy 100 shares if you have enough money, if you have enough capital in your account, and then sell puts on the company. That's two ways to win in one. Or potentially you could buy some cheaper puts if you think they might break down to the 43. Like I said, the RSI is showing us that this stock just has no more room for downside. And that's going to be very clear sign that we are due for a pullback very soon here, guys. So just keep a close eye out on the stock. As always, don't forget to like and subscribe the video. Leave your answers down below to the first questions that I made in the video. Is the sound a lot better? Can you hear me a lot clearer? And do you like this new way to show you the stocks where I just head straight to the technical analysis? Or do you still want to see me trade a little bit and talk a little bit on the Robinhood screen before I get straight into the play? So as always, guys, don't forget to like and subscribe the video. Thanks so much for watching and good luck tomorrow.